Ladies and gentlemen, good day and welcome to the Jindal SAW Q3 FY22 post-results conference call hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star and then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vikash Singh from PhillipCapital. Thank you, and over to you, sir.
Good afternoon, everyone. On behalf of PhillipCapital, we would like to thank Jindal SAW management for giving us the opportunity to host this Concall. And without taking any much time, I would like to hand over the conference to Jindal SAW management for the opening remarks. Neeraj sir, over to you.
Hi, good afternoon to all my friends, investors, stakeholders, and people on the call. We had our board meeting. Then in between we had the annual budget of the Government of India. And therefore now we are here to present to you the quarterly results, which is the third quarter results for this year, and also to give you a sense of how this budget is going to impact Jindal SAW Limited. First, turning to the results, Q3 we achieved a turnover of 2,800, which is quarter on quarter 11% higher, and corresponding period last year 28% higher. EBITDA 202, which is quarter on quarter 47% lower, and comparative last year 31% lower. And the rest pretty much follows the trend. However, one important aspect that we have to highlight is, so at present we would like to focus on these three particular numbers because prima facie, at the face of it, it would cause concern to any stakeholder who has any interest in Jindal SAW. So I repeat, a top line of 2851, which is higher than both the previous quarter, the previous trailing quarter, as well as the comparative last quarter, and EBITDA 202, which is lower than, again, both the comparative quarter as well as the trailing last quarter, and the financial expenses. The financial expenses, let's address that upfront, has shown a marginal improvement, which is an effort of the working capital management and the reduction in the loan, etc., that we have done. So that is pretty much going on the trend on which we are following, and we have followed. So that's the result of that. Now let's look at the turnover as well as the EBITDA, and also the percentage of EBITDA to the turnover, which is 7% for this quarter. Friends, typically Jindal SAW EBITDA percentage, a percentage of EBITDA to the sales, is in the vicinity of 15%. Under difficult situations, it would be less than 15, say 14.56. In a very good scenario, when we are doing business and things are okay, it can go up to 16, 17. So that's the range of EBITDA that Jindal SAW has always been. Here, we are at an EBITDA of 7% with a top line growth of 11 or 28, but healthy top line growth. What does this indicate? This indicates we are executing the projects well. We have the ability to complete, execute, and supply to our clients, which we have done. a lower EBITDA and a margin of 7% indicates something is seriously, there is some serious aberration in the cost structure. And therefore, to all my stakeholders, let me repeat, please take comfort from the reduction in financial charges. Please take comfort from the growth in top line, because in this environment, I must tell you, we have no notices, we have no litigations, we don't have any serious complaints from any of our customers for non-supply. So, on the top line, customer satisfaction, contractual obligations, we are absolutely on dot. So these are things that should comfort all our stakeholders, that we are not into any litigation. No government action is threatened against us in terms of non-supply, blacklisting, show cause. None of those are there, because we took particular interests to satisfy those and keep that alive in the interest of the organization. So I must tell you, we have fulfilled our contractual obligations, especially to the government agencies, not keeping a very myopic and a quarter into view. It is based on a larger view of relationship, customer satisfaction, and all of those. But the EBITDA percentage almost coming to less than half, I would say. Something is there in the cost structure. And for that, let me draw your attention to our basic raw material that we have been using. During this relevant period, which is Jan 21 to Jan 22, I am taking that as an average just to give you a trend, that here the HR steel prices have moved from $700 to $900. Coal has moved from 100 to 400. Iron ore 80 to 140. Domestic. Imported 180 to 250. So, see the kind of variation that we have in the raw material prices starting from Jan 21. Now, when you have this kind of an aberration, then this is an extraordinary situation where no hedging strategy would work. Every supplier would find a way to get out of any of your hedging strategies, so this would not work. All I wish to draw attention to all my stakeholders, that this is not ordinary business. This is not an ordinary situation. We have been facing an unprecedented volatility in the raw material market. And this quarter is a direct result of the impact of the spike in the raw material prices, where whatever hedging strategies that we had in our arsenal, it was not effective enough for this kind of a movement. We did not want to again get into a litigation when the coal goes from 100 to 400, no supplier is going to honor his commitment of 100. Period. He will find a way, or else you will have to litigate, go contract, this, that, whatever. So please appreciate, all I am requesting all of you to appreciate is, this is no ordinary situation. This is not a business volatility that we are talking of. This is an extraordinary, unprecedented situation. And in that situation, Jindal SAW Limited, the company that we are, have kept up with our promises with our clients, delivered everything. We do not have any litigation either side, either from the suppliers or from our clients. And we have managed to scrape through in terms of that, yes, margins came down from 14 plus to around 7, so margins have halved, but still we have managed to survive in terms of with our head held high. And now this is where we need to look at it, and there could be different ways of looking at it. There could be different interpretations of this conduct and behavior of Jindal SAW in this quarter. The first one obviously comes to our mind, and everybody is entitled to that view as well, that this is a weak performance. The second is, no, this is actually a strong performance, because the kind of storm that we have seen in the volatility, the kind of volatility that we have seen, the kind of storm that we have seen, this organization has still stood tall and fulfilled all its obligations to its customers. The turnover has gone up. So at least during this storm, the organization had stayed strong and has absolutely taken it on its chin, and based on its robust business model, financial strength, they have been able to tide this storm. Obviously, there was impact, and that is in front of us. So there are two interpretations, and I would request our stakeholders to really analyze a little deeper, do this over a quarter to quarter, and see that it is actually the fundamental strength of Jindal SAW that has helped us perform the way we did in the third quarter. Now, the second question or the immediate question that comes to our mind, is this going to be business as usual, or are we off the valley as yet? Or are we in the valley still? I must give you again the comfort that the raw material prices continue to be erratic. The coal continues to be in the 400 range. The HR coils have shown some softening, but it is nowhere close to the 700s that we used to see. So the raw material prices continue to behave erratic at an elevated level. But how it's going to impact Jindal SAW in the immediate quarter, which is the last quarter, which is in front of us, and the subsequent quarters, at least in the near to medium term. This is where I would like to now draw your attention. You would have noticed that during this quarter, the borrowings have also gone up. Significant part of that is towards working capital. And to that extent, actually we have a shipment of coal, which is close to 1.5 lakh tons, which we consume over a period of maybe 3 to 4 months, is leaving the shores and has already been bought and is on its way. So in a way, for the next quarter, as can be seen in the elevated level of working capital utilization, most of the raw material that is required, which will sail us through the last quarter, has been purchased, is on its way. On one side, this is now a fact. So at least for the next 3 to 4 months, we are now insulated on any further volatility in the raw material prices. Second, during this quarter, since we have maintained our relationships, we have kept our customers satisfied, we have been successful in spite of being a firm price contract. In many cases, except for the government, the EPC, all private cases, all EPC cases, we have been able to get a price increase because of our conduct and behavior during this quarter. Because they all appreciate that, yes, this is a genuine issue so we have been able to achieve a price increase in most of our contracts except the government contracts. In a lot of cases, we have also been able to convince the government that we need a price variation clause which is linked to a raw material index. And there also we have made good progress. So a combination of these three, that we have received a increase in price in most contracts except the government contracts. We have been able to convince them for a price increase, but the impact of that is not going to come in this immediate quarter because next round of tenders or any further tenders would have a price variation clause. So that would insulate us from the volatility in the raw material prices in the subsequent quarters. Maybe in the coming year is when we will get the positive impact. And in the short term, if you see our increased working capital requirement is all locked in for the purchase of raw material. So we have now a 3-month quota of raw material. We have price increase on our side, and we have been able to get the price variation clause included in the PSU or the government contracts, and that trend is continued to work. We will work with every government agency to include this going forward. Gives us enough confidence that the worst is behind us for this kind of volatility in the market. So Q4 would definitely be better than Q3. As we progress, we have some visibility of our 1-month performance. Based on that, we have the confidence that Q4 would definitely be better than Q3. How much better? Probably we'll have to see a few weeks more in terms of the trend of how the demand is picking up, how things are happening. But we are confident that it is now upward trend. So in terms of we were in a valley, we have come out of the valley. We are trending towards normalcy. Where we get encouragement is the national budget which was presented. So the recovery would be very steep. The trend would be a steep trajectory, is based on the announcements, the investments, and the kind of plan that the government of India has rolled out. And this time, what was a pleasant surprise, that government has not just given a very global or a big picture. They have actually gone down to the thing that, okay, it is the government which will be spending directly on the projects. So many projects would be done in a period of 2 to 3 years. So basically, the government has actually committed a calendar and a well thought out expenditure in infrastructure, which is going to propel the economy. So it's an expenditure-led growth in economy. It's again no subsidy. It is no tax break. It is not one of those usual SOPs. So it is something like the government has committed to the country, chosen the path that yes, we will work, we will make you work, and then over a period of time, this will lead to growth and happiness for all. That is very encouraging because linking of rivers, 6 rivers are being linked, Jal Nal mission, water to the doorstep, water to the home, all of those are very good news for us. And therefore, now the combined impact of the budgetary announcements plus the stage that I told you Jindal SAW is in terms of how to deal with raw material prices, gives us enough confidence that we are going to see a very good next year. The fourth quarter also would be better than the third quarter. Turning our attention to the order book, you would have seen that there is an apparent reduction in the order book. Our comfort zone is somewhere around 900 million to $1 billion. Currently, we are around 700. Again, prima facie, it may cause some concern. I wish to assure all of you, this is something that we are very conscious and it is out of choice. Because of these volatility, we were shying away from taking contracts unless we get a price variation clause or unless we get the right price. And therefore, it is by choice that we have stayed a little away from taking orders. Even the government side, even the EPC guys have deferred booking the supply of pipes because, again, they also have suffered or are suffering the movement in the steel and coal prices. So this is again nothing to get too concerned about. We would be getting now the pent-up demand is getting released, and I am absolutely certain with these budgetary announcements, infrastructure expenditure is going to go up. So, even though our order book at this point of time is lower than our comfort zone, it is not a matter of concern. It is a matter of choice and a matter of comfort, because now whatever orders will be booked at the prices which will be comfortable prices. So that's what I wish to mention as far as the trend and the future is concerned. Demand is going to be very robust. So fundamentals over the next 3 to 5 years is very, very comfortable. In fact, it's very positive and very encouraging. Two more important announcements that has been there. One is Satwana. As we have said, we are among the few participants. We are very hopeful, and if we are successful, this would be a unique advantage to us. We would have a very strong foothold in South India as well. At this point of time, the whole matter is sub judice. In terms of the NCLT, everything has been submitted. We will take a few months before any final result is announced, and therefore we are constrained by the laws to disclose or discuss anything further, except that we are hopeful, we are working hard at having Satwana with us. The second very important and significant announcement is the joint venture with Hunting. This will put our Nasik plant in the global map. This is the only plant, or this will be the only unit which, along with the JV, the entry into the plant would be billets, and the final product that would be supplied to the customer would be a wide range of lower end range of the diameter at 27 by 8. The higher end of the diameter is 36 inches, where obviously we will get for 30 and 36 on those higher, the large dia pipes, which will be the LSAW pipes. But to give this kind of a range of products for the OCTG market is unique in the world. It will put us in a exclusive club of few who dominate this in the world. This is not just this joint venture entering the market. This is for our current Nasik unit, for our current Nasik framework. It is a next door, co-located there, a ready market for 50,000 plus, because again we have to adjust for yield. So 50,000 plus we have a ready market available for the products from Nasik. So to that extent, the Nasik plant would be a lot more stable, it would be a lot more predictable, and would be able to perform really well. So this hunting joint venture is going to completely change us. It would be completely changing the OCTG business landscape in India, because this is completely aligned to the Atmanirbhar scheme, Atmanirbhar initiative of Government of India. Hence, fourth, all these products would be available in India by us. Thus far, they have all been imported. So the hunting joint venture is going to really be or put this business of our seamless market at a very different pedestal, and very, very difficult for anybody else to emulate. The reason why I say so is there are only few players in the world who have this kind of a technology or product which is patented. And for those few to choose a partner like Jindal with whom they could replicate a structure like this is not going to be simple. Because this joint venture is actually a collaboration or coming together of two very, very strong players with complementary skills. In our right, we have a position in the world. In their right, they have a position in the world. And then we have come together where we don't have to step on each other's toes, but both will complement each other's skill, and we will attain a different level. In fact, we all committed to make this Nasik unit a center of excellence as per the international parlance. So we are very encouraged about the hunting joint venture, encouraged about the DI. Hopefully we are working towards a win. Large dia is enough headroom available in terms of capacity. Pellet plant is stable. They have sustained. They have acted as a very good counterbalance to this volatility in the raw material market. And the result of Jindal SAW, the financial Jindal SAW has been very robust. One of the contributors has been this pellet plant. The rest, as I say, market outlook looks good. Market outlook looks robust. So with all of these, the way we look at it is that yes, we did go through a difficult quarter, but we have put effective strategy in place, and now we are out of it. Hopefully, fourth quarter, you will see some very good results, so that we will close this year at a reasonable place, and definitely we look forward to the next year, where we expect to do really well because of the demand and our readiness. So with this, I have addressed your most of the issues, I believe, in the results. So let me stop and take a few questions.
Thank you very much, sir. Ladies and gentlemen, we'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Any participant who has a question may enter star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Pratiksha from Equitas Investments. Please go ahead.
Good evening, sir. Thank you for the opportunity. So my first question was in terms of realizations. I think what we had understood as per your this commentary is that H2 would be where our newly priced orders would start kicking in, and we have started factoring in our the high RM prices in our order booking in first half. So this is when the high the revised prices orders would have come in. So, is it fair to assume that this EBITDA margin is after factoring in those orders, or is there anything else?
No. These EBITDA 3/4 is essentially where the raw material we did factor in. But let me just tell you, we never estimated that $100 coal will go to $400. We never estimated that a 700 HR will go to 900 plus. So those kinds of neither estimations were there, nor any of the strategy which was there to put in, long-term delivery contracts could work in this kind of a storm. So this quarter result is essentially because of the volatility of the raw material, which is the prime factor. And now we are at elevated levels. Good part is the raw material continues to be chirpy. The top line is likely to be a lot more elevated because of, as I told you, we have taken price increase, and some of the orders which are at the new prices would be now getting executed. So to that extent, we would be able to restore the margin of EBITDA, which is from 7. It will move upwards for sure.
Okay. But sir, if I look at the order book, that has been given as part of commentary this quarter, it looks to me that at least for alpha pipes and DI pipes, the realization for new orders is lower than what was done in the previous quarter. So, how does that fit in?
No, I don't think. Probably there is a misrealization in large dia and DI. If you are saying that realization per ton for large dia or DI in Q3 was less than the realization that was there in Q2, probably there is a miss. Request you that please get in touch with Mr. Goyal. We will like to clarify. I don't have those numbers, but prima facie that cannot be the case.
Okay. So, is it fair to say that between 2 quarters we have definitely booked the new orders, or the orders that got booked in this quarter, Q3, are at a higher price as compared to...
Oh, yeah. Much higher price.
Okay. And, sir, would it be possible to give execution period for our order book for each of our segments?
Yeah, okay. Let me just say, DI, because of the framework, etc., typically can go up to 12 months. Large dia is usually 6 to 7, 8 months.
Okay.
Seamless
Currently
and stainless.
About 6 to 8 months.
Large dia.
The current order book is 6 to 8 months.
Yeah.
Execution period for the current. Okay. Yeah.
And your seamless and stainless would be 12 to 16 weeks, which is 3.5 to 4 months, is where our order book, or the CDD as we call it, contractual delivery date, would span. So this is a kind of time horizon over which our contracts in different segments. Pellet, we have our realization, or the entire receivable cycle will be less than a month, because usually the pellet works on the spot market.
Okay. All right. And if you can elaborate on the profitability and the outlook for the Abu Dhabi subsidiary?
Abu Dhabi last year, as I told you, this year we are likely to do better than last year in terms of top line, in terms of tonnage. Again, as far as the EBITDA is concerned, the same raw material prices have hit there. We can expect some moderation. But in aggregate, definitely we should do better. But in terms of percentages, in terms of EBITDA per ton, we will have to see the impact of the raw material. But on top line, on aggregate, we are definitely going to beat the last year's performance. All
right. And last question you mentioned about the increase in borrowings. A part of that is because we have booked a large shipment of coal. So I understand that between September and December, our short-term borrowings have increased by about 900 crores. So how much, would be because of this coal shipment?
Mostly coal, because we got one large shipment. See, coal we get it from which has come. So primarily it would be coal, some would be steel and iron ore.
Okay.
Which is going to see us most of this fourth quarter. So now if there is any major movement in the raw material prices in the fourth quarter, it would have minimal impact because majority of it is already in our inventory.
All right. And sir, any update on our arbitration with NTPC?
The next hearing is in March because again the Solicitor General has taken a date. See, it's very simple. It has come out, now it's out in open. You can go to the website and see the judgment. NTPC and the government, they are playing the procrastination strategy. So the next hearing is on 15th March. Hopefully, judge has said that now I will begin to hear the 34 objection, means now they would want to hear on merit. That is what the judge has said, committed. So we are hopeful that now the discussion on merit would start.
Okay. Okay. And how much of our current order book would be exports?
Between 15 and 20. But that's likely to change because one good thing that has happened is the oil prices in the international market have started firming up, which is good news for our export large dia, especially LSAW market.
Okay. All right. Okay. Thank you.
Thank you. Our next question is from the line of Hari Verma from PMS Group. Please go ahead.
Neeraj sir, good afternoon.
Good afternoon.
Sir, though the results were not as per our expectation and in line, but being a metal industry, part of metal industry and associated with this, I know that the raw material prices were very erratic, very on the unforeseen level, not envisaged by anybody, and we are carrying out some inventory also. So that because of that factor, results are somewhere, you know, at the bottom of the cycle only. So I hope for a better future in coming quarter, and definitely it will be the raw material prices have softened out. You have also mentioned that. So I won't ask a couple of questions on this part. Let the other participants should ask. I will draw your attention on some other sector, other point which is reflected in your press release also, and you have mentioned here in your briefing also about Sathavahana Ispat. Sir, let me congratulate you for Sathavahana for the efforts of getting Sathavahana Ispat into our fold, because as it is our DI pipe business was saturated, and I believe that DI pipe has proved savior for us, actually for our company. It has contributed largely, and it has also set off some lower realization in other part also. So, and you also said that strategically it is very good, and you just mentioned that it is an unique advantage to us. Sir, I have visited this plant many times. The DI plant is very good. It is one of the best plants in India that has been claimed by the technical people or ex-Jindal people who have worked there. And because of the bad management and the policy of management, this company is where it is today. Otherwise, this company was very good. The Piramals were trying to take this company into their fold. Thereafter, Srikalasti, Kejriwals were also trying, Tatas were also trying. I think Jindal first came into contact with this promoter of this company in December 2017. At that point of time, the sale price of this company was 70 rupees. Thereafter, we entered into OMA in August 19. On the same day, Concall on 2nd August, you announced the hunting joint venture, and you also announced the Sathavahana OMA with Sathavahana. And we were very happy that because of the management, we being the investor in DI pipe industry in Sathavahana as well as in PMS account, we were very happy that this management of Sathavahana is going to change and Jindal is coming and everybody was very optimistic, very encouraged. Now finally Now finally Jindal is coming, PR Saab, the company is coming into PR Saab's fold, and you being professional management, the company will definitely revive, and the interest of the stakeholders will also be revived. But sir, I have heard from my sources, I have information from my sources that in your proposal to NCLT, the Jindal So has proposed to delist the share and write off the share, sir. Sir, my humble request, if this is true, my humble request is, sir, there are other, the promoters' mistakes. Because of the promoters' mistake, the remaining minority shareholders cannot be penalized, sir. There are 10-12 shareholder families only. Only after promoters' equity, only 3 crore shares are left. So if you and the company is very good, we will get not only DI pipe. There is scope for DI pipe also, expansion of DI pipe also. I was part of the implementation plan. We will be able to have merchant coke in our fort, at least 2 lakh ton. We will be having surplus power which will be generated, at least 20-25 megawatt power, which will be generated free of cost from the Kudithini plant. The Kudithini plant is just situated outside the Kudithini station, sir. The raw material and finished goods can be transported by rake movements. We will have pig iron merchant pig iron also. Sir,
Mr. Verma, sorry to interrupt. May we request you to please ask your question, sir?
Sir, ma'am, my point is very limited on this issue only. Instead of asking 3-4 questions, I'm concluding. So, Neeraj sir, my humble request is, if you are proposing or if you have proposed to delist or write off this share, kindly don't do that. It is a perception matter, sir. Perception matter. Tata took Bhushan Steel, they revived and they merged it. Even Sajjan Jindal ji took Monet Ispat, they revived and they will sometime they will also merge it. So my humble request is folded and don't write off, don't delist the shares of equity minority shareholders, sir. Thank you so much.
I must compliment you that your analysis that you have done on Sathavahana is fairly accurate, and it definitely reflects that you have all the data points kind of well researched out. You know the logistic advantage, you know the advantage of the plant, you know all of those. But in the briefing itself, I had mentioned that now since everything is with NCLT, which is the whole matter is kind of sub judice, it would not be appropriate, and I have been advised by my lawyers not to discuss the resolution plan at this point of time. So I do take your point. I have heard your thing, but in terms of what is there in the resolution plan, I am constrained by my lawyers to discuss this any further because everything is now with NCLT.
Sir, I fully appreciate and agree with you, but I don't expect you to say anything on public forum because this is sub judice matter, as you rightly said. But JC Flower, Jindal So or its associate has invested in JC Flower. Behind ARCV, somebody has to be there. You are Jindal So is there. So and JC Flower is the only COC, sir, and RP has been appointed by them. And the day before yesterday, Sathavahana had its AGM, sir. Many shareholders requested, sir, to RP to look into their interest part. He said, I will definitely look into part, but it depends on the resolution applicant first. He has to, sir, there are a lot of benefits, and it will be a feather in the cap of Jindal So by grabbing this unit. Immensely benefited, mostly in DI pipe. Moreover, sir, perception matters. Today, Vedanta or Anil Agarwal sahab took electro steel Bokaro unit. They just written off everything. He got very heavy criticism, sir. Yes, last week only he said, I'm going to donate my 75% over. What is the use of 75% donating, sir? If he could have sold out 2,000 crores, the lakes of the family would have been survived, sir. So, sir, perception matter, and PR Jindal Saab very generous, sir. I met him once personally with my chairman. So, kindly look into it, and you are influential, you are the decision maker, sir. Definitely, if you prevail, you will do something very good for the minority sector of Sathavahana Ispat. Thank you so much, sir.
Thank you, Mr. Verma. We will take our next question. That's from the line of Anurag Patil from Roha Asset Managers. Please go ahead.
Thank you for the opportunity. So out of our DI order book, what percentage will be from the government-related segments?
DI order book, government-related segments, in fact, the entire DI consumption is with the government-related segments, which there are two business models. In first, there is a direct purchase, which is called the item rate purchase by the government under a tender. The second is the government appoints the EPC contractor for the water project, which is pipe plus laying, and then in turn the EPC buys the pipe from the suppliers. So to answer your question, how much of DI goes to the government, the answer is 100%, because there are hardly any private players who buy DI. Some who may be developing, say, private city, smart city, or integrated township, but those are all very marginal, and then they take it from traders. So the entire DI goes to the government either through a direct purchase by the government under the item rate contract or through the EPC. So the 100% goes to the government. Now this breakup, it's very fluctuating. It keeps on going here and there. Like states like Haryana, Maharashtra, they follow the item rate contract model. States like Uttar Pradesh, states like Madhya Pradesh, Tamil Nadu, they follow the EPC model. And depending on which state, which contract you have, you will keep on changing between the item rate as well as the EPC model. But again, just to conclude, to answer your question, 100% of DI or more than 99% of DI goes to the government projects only.
So sir, broadly, means what percentage will be without escalation clauses? That I wanted to understand. Or all will be exposed?
No, at this point of time, now with every EPC that we are signing, A, we have achieved a price increase. B, any new contract with EPC will be with a price variation clause. And we have also been able to successfully work with few state governments where we are expecting the tender to come out in the next few weeks with price variation clause. So our effort is to move the entire pipe purchase with price variation clause. It may take a month or two, but that we have taken as a strategic view after a lot of consultation, that we have to move into a price variation business environment for DI, especially when there is a long lead, because as I mentioned to you, we can get contracts which are up to 9 months to 12 months, because they are frame contracts. So that will happen, and it should happen over a period of maybe next 1 month or 2 months. With the item rate contract, with EPC, it's already happened.
Okay, sir. And another question on the hunting JV, what would be our investment and revenue potential from this project?
It's a 51-49 joint venture in our favor. So again, that should give you some sense of the relative strength that Jindal has, that even like a global partner with hunting, we have managed to get a 51% joint venture. In terms of the revenue potential, in India, there is a target market of over $200 million year on year, where this OCTG products, etc., are sold. Plus, we have the MENA region and then across the globe. See, what you must focus on In India, under the Atmanirbhar, we would have this $200 million plus target market available to us immediately. Once we have a track record, then in MENA region, especially in the Gulf and North Africa, we have a very, very advantageous position because of the Mundra port. That's from where 6 days of shipment and you are going to serve that market. Because of the cost advantage that you have, you can actually become a global player as well, because wherever all the Europeans and all the Americans, wherever they are no match to the cost structure that we would have on account of, and the Nasik plant is co-located. So raw material, just-in-time inventory, inward freight, almost negligible. It gives us into a position where today there is a 3-step marketing strategy. First, address the $200 million India market, expand to the MENA, and finally go to the world.
And sir, what would be the capex required from our side for this plant we are setting up?
The overall outlay in the first phase would be about $25 million to be in the capital shed and all of those. Similar amount, $25 million of working capital. But again, because of the relative strength of us and Hunting, the initial equity contribution from both partners would be of a much, much lesser magnitude, because we are in the process of arranging bank financing for both capex as well as working capital. So for working capital, all the promoters would be required to fund will be the margin, and we expect that at least a debt equity of 1:2 is something that might fly with the banks. That's where we are. So all put together, then the contribution from Jindal SAW in the equity would be less than $4 or less than $3 million for overall structure of or overall financing structure of over say $50 million, 25 in capex, 25 in working capital.
Okay, sir. Thank you very much for detailed answer.
Thank you. Our next question is from the line of Hetal Gara from ITI Mutual Fund. Please go ahead.
Hello. Good evening, sir.
Hi.
So first I wanted to ask you about pellet plant. You know, iron ore prices have started rising again in the international market. So how is the business doing, and what kind of profitability we are seeing in this plant currently? Q4, how do we pellet plant?
Pellet plant, okay. Pellet plant, we are operating almost at capacity. We have a 1.5 million ton capacity per annum, and we are almost operating at capacity. The margins were at one point of time very good, in line with the HR prices and all of those, because as you know, pellet is also an intermediary. It goes into the steel making. So this is where whatever we suffered on the raw material side for DI as well as for HR got counterbalanced by the pellet, and their margins were there. It is riding. So capacity wise, but now pellet prices have softened from its peak a little bit, which was expected, and we are fine with it, as the HR prices or the iron ore prices are beginning to soften or beginning to come down.
Okay, but sir, in the last few weeks, prices of iron ore have bounced back to $144 in the international market. So are we seeing similar pickup in pellet prices as well? And what will be the
it would. See, it would essentially, when you see the iron ore lumps, plats, iron ore lumps, plats and pellet, they will always be very highly correlated. The only difference would be whether it is pellet of 65 grade or 67 grade. 67 grade will fetch you a premium, maybe a few percentage over the 65 grade, but these prices, all three, would always be in a range.
Okay. Okay. So what from the peak levels, sir, what do we, and how much difference or what will be the levels at which the profitability will be right now in the pellet segment? So obviously they are not at the peak, but what levels can we see the margins currently?
So, madam, if you are wanting to ask me what is the EBITDA margin for pellet segment on a separate basis, that is something that, as I have said, we don't disclose. It's always the blended EBITDA of. So what I can tell you is Jindal SAW generally has a EBITDA range of around 15, which is above 15 or below 15 or all those. Currently, we are at 7. Last quarter, you will see a upward trend for sure. Here, we would have again an EBITDA margin of close to, not exactly 14 or 15, but very close there we would achieve, because we hope that the Q4 results would be better. And in the first 2 quarters, we have achieved again 14 plus EBITDA margin. So year end would have the impact. The third quarter will have an impact for sure, but it would recover in Q4 for sure.
So secondly, on your steel business, like you were planning to set up a steel business in Rajasthan, you all had an agreement even with the government for iron ore mines. So any update on that front?
At this point of time, the steel plant is definitely not on the anvil. It has been there for some time for the in the drawing board stage. We stand committed, but government has to fulfill certain obligations in terms of land. Now we are told that few new mines may come up for auction. So definitely long term, if all goes well, government fulfills all its obligations, gives us the mines, and are there, we may look at forward integrating into the steel business. But those are all conditional and those are all contingent upon what government does, how the new mines auction goes. So for the purpose of your calculation, if you are looking at a 2 to 3 year horizon, then neither the capex nor the iron ore, etc., or nor the revenue from this should matter to you.
Okay, sir. Sure. And sir, lastly, just wanted to understand regarding your bank guarantees that are still remaining for Jindal ITF. Any update there?
Those bank guarantees are they continue to run because they are all tied up to the NTPC, the litigation which is in High Court. The bank guarantees are tied up there, and it continues to be there, the status quo.
Okay. Okay, sir. Thank you. Thank you so much, sir.
Bye.
Thank you. Our next question is from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yeah, namaskar, sir, and thank you for this opportunity. So firstly, just to sum it up in this long conversation, we had an EBITDA of 7% for this quarter, and you are expecting an EBITDA higher of what we had done for the third quarter. So, sir, can you give us some understanding with 1 month execution period over, what kind of ballpark that should be worked out with? Because anything above 7% is even 7.1. So, if you could give us a band with which we are currently working, just putting off the vagaries of the raw material again playing out in the coming quarter.
Saket, forward-looking statements, forward-looking commitments on EBITDA, to give a number will not be possible. What I have said is that if you see first half we have done EBITDA of close to 1,000 crores. No, this is for 9 months at a top line of 7, 8, 9 and about 700 and 900 with an EBITDA margin of 12.58. What I am saying, this 12.58 is likely to move higher on account of Q4 results.
Okay. So on a year as a whole, we are going to be ahead of 12.58%. This is what you are guiding on.
Should be, is what we expect, unless again.
So what is okay, sir? What is the 9 months of pipes volume, sir? That I will take offline again.
Saket, if you read through the
maybe, sir. I was just looking at the 9 month figures for us.
Absolute exact figures have been circulated for 9 month pipe volume.
Sir, again, sir, a very short point, sir. Herein also, sir, when we look at the numbers for the console part, although hello.
Saket, 7,65,000 is your 9 month total tonnage of pipes.
Okay. Of pipes. And you have a comparable number for the last year, sir?
717, right?
Yes.
717. So 717, 765 versus 717.
Okay. And looking at the deliverables for the fourth quarter, wherein we are tied up for the commitment, what should be the trajectory we will be closing in terms of the deliverables?
See, we should end the year more than 10. So that leaves you with about 2.5 lakhs, over 2.5 lakhs for the last quarter.
Over 2.5 lakhs for the last quarter. Correct, sir. Sir, observing the numbers, wherein definitely the raw material costs have passed through the P&L. Other than that, sir, even the employee cost, our fixed cost has been, sir, if I may use the word, being very stubborn, and that have risen only. If I take the numbers for the December quarter last year, on a consolidated basis, the employee cost was 233 crores. Herein now, for this quarter, it is 268 crores. So, if we take the volume for the pipes and the business, we have done lesser business than what we did for the last quarter. But the employee costs have gone up by another 10-15 crores in these tough markets. So, sir, what steps are you taking to take into account these costs that have been ever increasing, sir?
I don't know where you are seeing that number. Why don't I ask you, Saket, to have this discussion offline? Where
definitely, sir. Last question. Yeah. Lastly, ma'am, just allow us to complete, ma'am. Otherwise, it will be half-baked reply always. So please, if you permit.
No, it's not a question of Saket half-baked reply.
No, ma'am is asking me, the moderator is asking me to come in the queue. I was just trying to conclude my point with your permission.
Okay, let me just, and boss, then let us also hear this. The numbers that you are quoting, they seem to be, there is a gap or a misunderstanding. Because if you are saying
I am looking at the printout that 233 crore was the employee benefit expenses for 31st December 2020, and the employee benefit expenses for 31st December 2021 is 268 crore. So these are the numbers there, what have been published by the company. Sir, coming to the point, when your outlook part, sir, you have been very well mentioning that the company's business operations are highly structured, offering very focused and specialized solutions across saw pipes, DI pipe fittings, and all those stuff. So when we look at the...
Mr. Saket,
yeah, please. Sir.
Let me just stop you there, because since you are saying something which today we have an audience, it is going large. And as I told you, the numbers that you are quoting is not matching. So please don't continue just quote which numbers. Here I have the numbers in front of me, because please understand what you are saying, there could be a gap in understanding. But we cannot let you proceed with these numbers, because it would have an impact for others who are listening to it.
Please correct me,
so
sir.
Now stay here and tell me what the numbers are.
Yes, sir. If I look at the column...
Mantri is here. So Mantri, the CFO is here. Please first let me identify these numbers where you are talking about so much of increase in manpower cost.
Yes, sir. The employee benefit cost for this quarter, sir, what is the employee benefit cost?
It is 267.93.
Correct, Bhattiji. And what was the cost? Yes, sir. Correct.
Console.
Correct, sir.
You are talking about a console.
Yeah.
Yes, console. What was the cost for us for 31st December 2020, sir? Mantri ji?
2020 it was 233, but if you see the September quarter, Q2, it was 257.
Yes, sir, it is 257.
Yeah.
The short point, sir, again, that is reason on quarter also, sir. The short point I'm trying to make, the volume of pipes sold by us for the December quarter was 283,200, wherein the volume is for this year is 262,000, wherein our employee cost has gone up from a figure of 237 crores to 268 crores, and in a market where we are facing lot of turbulences in terms of raw material. So I was just articulating the point that our fixed cost on the employee line item is higher. So correct me, sir, where I have given you the wrong information to the large audience listening to us.
Because probably we need to have the clarity. You are talking about console numbers.
We will always talk
discussion that we have had, sir. If you see so far, whatever numbers that we have discussed is only on a standalone basis. Now, on console basis, the tonnage, all the 7 lakh and 10 lakh that extra that we have given is all on Jindal SAW. So far, we have discussed all volumes, all numbers, everything on Jindal SAW, which is the standalone basis. Now you are bringing in console. I don't mind discussing that, but we will have to then first let everybody know that we are moving away from console to a standalone to a console number, and then talk numbers. So अभी तक जो भी वो 7 लाख या 10 लाख अभी previous सवाल में जो मैंने कहा था, या for that matter your turnover of 2,800, your EBITDA of 202, they are all standalone numbers.
Mr. Kapoor,
sir, even for the stand.
I'm sorry, Mr. Kapoor, we will not be able to continue. There are several participants waiting for their turn. May we request you to please return to the queue. Thank you. Ladies and gentlemen, we would request you to please limit your questions to 2 per participant. We'll take a next question from the line of Urvija from Isha Securities. Please go ahead.
Hello.
Yeah, hi.
Hello. Yeah, hi, sir. Sir, so we have been with the company as a shareholder since I think last 5 years. And I mean, you have always been very proactive, sir. I think since last a couple of years, you have been always asking that what as management you should do for creating investor returns. So I think you have a very open mind, and congratulations on that. We have made changes to the presentations and our reporting standards and IR team. So, sir, I think one more previous participant alluded to this question, and that is why, sir, as a shareholder, minority shareholder in Sathavahana Ispat also, I would like to draw your attention. He has already given many examples about good corporate governance displayed in the previous NCLT cases, IBC cases. So, sir, I think belonging to reputed Jindal Group, sir, I hope that, minority friendliness is continued there as well, because as it said, I think it all relies with the resolution applicants. I think there are 2 or 3 of them. So, being one of the party, I would urge you and others to definitely consider the minority shareholders here as well. So, coming back to our business, sir, what is the capacity utilization in our seamless and stainless tubes? I think the volumes have gone up this quarter. So, and if we have break even in that segment, if you can reply to these 2 questions.
Yes, if you see the seamless, stainless, alloy steel all put together, then definitely we are above cash break even. The stainless, as you know, is at 3 places. If you look at each one of them, they are close to break even. But if you combine the carbon steel, alloy steel, SS business, which is Nasik, Nagothane, Kosi, Samagoga, all put together, definitely it is a profitable business.
Okay, sir. And I hope as a minority shareholder in Sathavahana and being one of the resolution applicants, sir, you will display, the good corporate governance will be continued displaying there as a group.
We have taken note of your concern. Another participant, also one of our stakeholders, have. So we have taken note of all of those, but as I said, I am constrained to talk anything further on that at present.
Thank you. We'll take the next question from the line of Sandeep Raj from Oculus Capital. Please go ahead.
Hi, sir. Good evening. I just have one question. I wanted to know which pipes are used in river linking project that was announced yesterday in the budget, and what can we expect from this project for Jindal Saw? Thank you.
Okay, river linking projects, if you have, can use or mostly will use large diameter pipes, which is helical, because when you are linking the rivers, it would all depend on the kind of water that you are wanting to discharge. It has also been well established that river linking projects, especially if the distances are far, canals cannot be used, because in canals you only normally have gravity flow. So then the depth will be such that it would not be viable. So linking of rivers over a large distance, helical pipes, large diameter pipes which go up to 4 meters to 5 meters in diameter would be the most suitable, and you can use multiple of those if the really flow requirement is very high.
Thank you. Due to time constraints, we'll take our next question from the last question from the line of Radha from B&K Securities. Please go ahead. Radha, could you please unmute your line and go ahead with your question? Radha,
hello.
Yes, ma'am. Hello. Please go ahead with your question, ma'am. There seems to be no response from this line. With that, I would like to hand the call back to Mr. Vikash Singh from Phillip Capital for closing comments. Over to you, sir.
On behalf of Phillip Capital, I again would like to extend my sincere thanks to Jindal Saw management for giving us the opportunity to host this call. Sir, if you have any closing remarks, please you can proceed, and post that we will close the call.
Yes, in fact, I wish to thank all my stakeholders, and I hope that I am able to, or I have been able to give a perspective to all our stakeholders that yes, indeed, we have gone through a little troubled times, and we have come out of it, which has impacted our third quarter result. But it is that in a difficult circumstance also, we have been able to come out with a minimal impact is actually the robustness of us. The second point is that we do have a very, very encouraging immediate as well as medium future based on our capabilities, based on the robustness, based on our JV announcement, and all of those backed up by the tailwind that we will get is from the budget and the government initiatives. The third point that I would like to mention is, again, this is addressed to Saket and some of our friends who have been there, that on a large group like this, we would be very happy to answer any of those questions. The whole idea is to answer questions. But sometimes when we are getting into this situation where there is a confusion, we will have to stop. So I would request Saket not to take this otherwise. Please call us, whatever your questions are, we will answer that. In future, I would request all our friends, stakeholders, if you have these or such specific questions on some specific numbers, we always circulate the results and everything in advance. You have our email addresses. Please send those queries. We will take it, and I'll make sure that I have all the right numbers in front of us so that there is no confusion. And therefore, Saket, as I said once again, please call us. We will get you all the answers. In future, if you want to discuss specific numbers out of the result, which is always circulated, we have circulated even the write-up on all of those to explain all of those. Please send us a mail so that we are well prepared for this, and we will definitely answer that. So with that, I wish to thank my entire stakeholder fraternity. I know all of you have a concern which we share, that why the market cap is not reflecting our fundamental strength. That concern is with us as well. But we are hopeful that soon it would be as it has been. If I see the last few quarters, definitely the market cap has been reflecting our fundamental strength. We are far from it, I must tell you. We are also concerned on how to do, what to do. Whatever is within our control, we are doing everything. But if any of you people have any suggestions, we have been taking on board all the suggestions. Please either send us a mail or ask for a call. We would like to do that. So with all of those comments, let me thank all of you, and hopefully we will have a year end which would be a smile for all of us. Thank you.
Thank you very much. Ladies and gentlemen, on behalf of PhillipCapital India Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.